The Fed has done two very terrific things for the market. They provided $1.5 trillion of liquidity into the market last week, and they signaled to the repo market that they would be in the repo market, providing liquidity in the repo market as well, which is super important for the fixed income space. And then secondarily, on March 15th, obviously that's Sunday night, they lowered rates to zero. They took rates down as low as they can go, and they started a $700 billion quantitative easing program. And so those are similar measures or similar devices that they used during the last financial crisis. And so unfortunately, as I sit here talking to you, the futures market is down a lot. And we're probably going to be down 5 or 10, possibly 15% from the moment that the Fed started that policy. So that tells you two things. Number one, things would have gotten way worse than that had they not done that. And number two, there's a tremendous amount of uncertainty right now directionally where things are going. The biggest thing that I'm concerned about is that the Fed can do a lot for big corporations and do a lot for asset holders, but it's really got to come from the fiscal side and from the Congress and the American presidency to provide relief and help to middle class and lower middle class taxpayers. So hopefully we can get a combination of those two things. But I like what the Fed is doing right now, and it gives me and SkyBridge reasons to be very optimistic. The big issue with the coronavirus right now that we see from a SkyBridge perspective is that there's a tremendous amount of information out there on the coronavirus, but there's really a lack of understanding. And so that sort of surveillance or that testing, which provides a bird's eye view for epidemiologists and people like that to look at the growth and to be able to assess what our healthcare needs are, that's sort of been unavailable to America right now. So the president taking that step, again, I don't want to make this political, but it was a little late compared to what South Korea and Singapore did and what China is doing. It's more consistent with where Italy started, and that's why the crisis has grown out of hand in Italy. So hopefully the measures that the president and his task force are taking right now will slow down the virus. And these are certainly measures that I think are positive, but I think history may judge them as being a touch late. We probably needed to be doing this stuff or thinking about it in January as opposed to mid-March. You've entered into a bear market. If you just measure the movement of the stock market, we hit a bear market territory. It rebounded on Friday, but the market's trading very sloppily, and so all technical indicators for us indicate that we're actually in a bear market right now. And economic growth and economic opportunity may resurge, and there may be a lot of spring loading, meaning there'll be pent-up demand as we sort of depress economic activity as people are staying home and being quarantined, and it'll sort of spring load and pop out of there by the third or fourth quarter of this year. But I do think it's going to require some help from the government, particularly in the small business community, where restaurants and some of these small businesses are living revenue month to revenue month, paycheck to paycheck, so to speak. And having a 3 or 4 month interruption in their businesses is going to create a lot of losses. And so it'll really depend a lot upon what the government will do in terms of handling the crisis for the business community.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Multi-Advisor Hedge Fund Portfolios Series G and the SkyBridge G2 Fund, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.